Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. Well, what you can see today on charts is a much stronger dollar. If you didn't read any macro news, you may think it's all about Donald Trump, which he had a State of the Union speech yesterday, but actually it is not due to Donald Trump. It is due to the Fed speak yesterday. It is due to the fact that that Fed speak, so words from members of the Fed, of the FOMC, were hawkish, were very hawkish, and the odds for rate hike in March increased significantly. Let me show you the chart with the odds. You can see that they were more or less going up steadily month over month. Most recently in February, that chance for rate hike was around 40-30%. Before yesterday it was slightly above 50%, but now it went to 80%. And why? Well, let me tell you what Fed members said. So what we had was Mr. Dudley, and he was he had the biggest influence on that. He's a voter, and he was considered a dovish member of the Fed. He said that the case of rate hikes is more compelling, but that's not all. Obviously, I will tell you in a second. Kaplan from Fed said the rate path is more important than timing of the next hike. Also a voter, Williams, considered a hawk, but non-voter, sees a March hike getting serious consideration. Williams also added he still is comfortable with 3 hikes this year and does not see need to delay a rate hike. And Bullard, who is a non-voter, but he's considered as a dovish member, he said that stated that the Fed has essentially reached its dual mandate and should allow the balance sheet to normalize naturally. Bullard also added that the policy rate can stay relatively low over the horizon and that he still expects 2% growth, thus no reason to be aggressive on rate hikes. But the most hawkish moments were Dudley and Williams. It was in the interview with CNN. Mr. Dudley is New York Fed president. He said that the case for tightening has become a lot more compelling in recent months, and added that the risks to the outlook are now starting to tilt to the upside. He said that animal spirits have been unleashed a bit post the election, and there is no question sentiment has improved quite markedly. Right? He also said that 3-4% GDP growth in the medium term is possible, which should we see further improvement in productivity. Okay. Mr. Williams said that March rate hike is getting a serious consideration, and Fed is very close to achieving its dual mandate goals. Right? So we had that, which caused the spike in the odds for a rate hike. Stocks are trading higher. Dollar is stronger. Stocks are trading higher despite those hikes, and most of the books about trading, about investing, it is said that when there are rate hikes, stocks should go lower. No, not this case. Not this case. We're living right now in a different environment and different market conditions, and we are living on the market which is driven by dollars, euros, yens printed out of the printers, fresh new money which is flooding the markets, and market conditions changed vastly, right? So it's not like in the books. Now we can see that stocks are spiking without any news, on bad news, on good news. It doesn't really matter for them. Stocks are driven by Mr. Trump, right? Oh, I forgot to tell you about Mr. Trump. Everybody who was waiting for any significant news about details about the reforms or something, or his tax scheme, everybody who waited for that left empty-handed. Mr. Trump didn't deliver any details. His tone was presidential, right? He asked for cooperation with Democrats, with cooperation with Republicans, to overcome the recent, I would say, troubles that we're having on an American streets. He also is talking all the time about that investment in infrastructure and increase in defense spending, and that investment in infrastructure and defense spending are driving the markets higher. Also let me show you like that, maybe today. Also from the fundamental point of view, what was driving markets higher was PMIs from China, which came better than expected, as you can see. GDP from Australia, also very good, as you can see. But that data that helped the markets was Chinese PMIs. Let me show you only those significant data for today. We had other PMIs, right? From Germany, worse than expected, Eurozone, worse than expected, Great Britain, worse than expected, and now British pound is going down heavily. We're waiting still for a CPI from Germany. We're waiting for PCE from United States, and the news of the day will be rate decision from Bank of Canada. Okay, so fundamentally that was a pretty good day. We can be happy with what happened from the fundamental point of view, because it helps to increase the volatility. It helps to see some trading signals, right? Because in many cases important supports or resistances were broken yesterday, which triggers trading signals. But for that, let me show you that on the charts. This is British pound to American dollar, so our cable, where we had this symmetric triangle formation and a bullish breakout. It resulted to be false breakout. Traders were punished for that. The price went inside the symmetric triangle, then bounced from the local very important support, and finally we got a breakout. Yesterday we were telling you about the possibility of a pending order somewhere here. If you use the pending order, you're now 60 pips on profit, but that looked decent. 1 contact, 2, 3, 4. After the breakout we have a test for a comeback, and then a significant drop. Very technical bearish breakout here on cable. I like this kind of a price action. Interesting situation is on gold and silver. On gold, obviously, we are still bullish. We are above the trend line, but we have a few signs that this uptrend can be not stopped, but we can see a nice drop, probably stop loss activation. As I was saying, not stopped but paused, right? We are getting ready for a correction here on gold. So probably this trend line will be broken. So what I would like to show you is potential targets, potential target of this correction. Obviously, as I said, there is too early to think about the end of the uptrend, because from the top we didn't even retrace 23.6 Fibonacci level, right? Most probably we can stop somewhere here or even here. Maybe let me show you the potential correction equality movements. Okay, this is this correction. Correction equality will be somewhere here. Maybe another one, maybe correction this deep. Need to change colors. Maybe orange or coral. I'm not really good with colors. Maybe like that. So we have four or five even potential targets, right? This one, this one, this one, this one, and this one. Which one is the most probable? Hard to say. I think that this one is at least probable. This one should be a strong support, and 38.2, I don't think so. So the decline, if the support will be broken here, and as we can see the price is still above the trend line, those are potential supports for the price of the gold. Bearish scenario, well, in the short term, because again in the long term we are positive. Bearish scenario in the short term is supported by this head and shoulder formation, left shoulder, head and right shoulder. Obviously it's very small head and shoulder formation. Let me show you the potential target. Minimum target of this formation is here. So actually the minimum target of this formation is on the correction equality of this movement, right? We'll see. Sentiment stays positive. Now it's time for bears. Now it's time for taking profits, and that's all what I'm seeing on gold right now. Interestingly, silver was behaving much stronger than gold. As you can see, on gold we are about to break the trend line. On silver we are far from the trend line, and before this drop we are quite high. We are on local, we are very close to the mid-term, long-term highs. Sentiment on silver is definitely positive as long as we stay above the red line. The sentiment is positive in the mid-term and short-term. As long as we stay above the blue line, the sentiment is positive in the long-term, right? Look at that. Candlestick from yesterday is not very good for the buyers, as it's a shooting star. But anyway, sentiment on silver is still positive. We're above two trend lines. Those corrections are very flat. Actually, the biggest corrections that we have were one-day corrections, right? We didn't have two bearish candles in a row. One bullish, one bearish, one bearish. This one is bullish from yesterday, but well, it's a shooting star, right? It has a bullish body, but overall sentiment from this candlestick is bearish. But anyway, that's what it counts here. Silver, so silver much stronger than gold. Euro dollar. That was our scenario for euro dollar that we highlighted recently, and it looks like it's going to happen. What we said, there was no bullish breakout from this wedge. The price just crawled from this wedge, went up, and then retraced. So that wasn't a buy signal. And actually, we are having a comeback right now. If we would see that there is like that, this wedge, that was a false breakout. This can be considered as a false breakout and a sell signal. I don't like euro dollar. I won't talk about euro dollar much. As long as we stay above this blue line, the sentiment is kind of neutral, but once the support, this horizontal support will be broken, we are done. Australian dollar to American dollar, I think those correction equality movements are finished. As you can see, even the better data from Australia didn't support Australian dollar. Well, it's still stronger, much stronger than euro, for example, which you can see from today's trading on euro to Australian dollar. But it's weaker than American dollar. What we are having here on the daily chart, it will be interesting. We have a pin bar bouncing from a horizontal resistance. Then we have a breakout of the midterm trend line, and it looks like this signal will be continued. Obviously, in the long term, the sentiment stays positive because, again, we didn't break even 23.6. But I think that the movement, correction movement, at least to 38.2 Fibonacci level, wouldn't be surprising, and I would love to see something like that. The movement here, maybe trend reversal pattern here, and then an upswing. Speaking of euro to Australian dollar, after this hammer on a double bottom formation, the price was trying to pull 4 bullish days in a row, but that better data from Australia caused Australian dollar to be much stronger here, and a huge decline, so we will be under the pressure all the time. But as long as we didn't break this support, buyers can still hope for an inverted head and shoulder formation, for inverse head and shoulder formation, right? But they would have to stop this decline soon. Here is the neckline. For a bullish scenario, what do we need? Is a price action like that. New Zealand dollar to Japanese yen, still defending this horizontal support. We are below this resistance and this horizontal support, so soon the price will have to decide if they want to break the upper line or the lower line. Australian dollar to Canadian dollar. What we had here was a movement which that was a head and shoulder formation. We had the movement, we had the downswing that created a minimum target for this formation, right? And then price went higher. So from buy signal, we went to sell. That was buy signal, then a sell signal, and now we're on buy signal again. So the price is playing with traders, at least with price action traders. Luckily, we don't have a position here. Sentiment is positive, right? Australian dollar to Canadian dollar, it's a definite positive sentiment. Canadian dollar, British pound to Canadian dollar. Here we had a bit of optimism. after the price finally broke this trend line, but American dollar is losing heavily. Maybe we'll see this support under the pressure here as an interesting opportunity for a pending order. Australian dollar to Japanese yen. What we had here is this horizontal resistance, which is tested now. To be accurate, and do something like that. As you can see, it was respected here, 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 and here. What I would like to show you as well is a flag here. Okay. And a trend line. So here the sentiment is definitely positive. Why do I say that? Because we are above a trend line. We had a wedge, which is a trend continuation pattern. We broke out of the wedge. We broke this resistance. And we are pushing against the long-term horizontal resistance, right? So sentiment here is positive, especially when we finish this downtrend here. Now the price advancing higher, it looks positive for buyers. Australian dollar to Japanese yen. Here we do have a buy signal. Euro to Canadian dollar. Here we are having a retracement. Okay. This line stopped being relevant somewhere here. We had a horizontal support. This is very important horizontal resistance, and scenario here is the price obviously going down and testing this support here. If we would have a bullish reaction here, we can have a really interesting trade in terms of the risk to reward ratio, because if we would see something here, then you buy somewhere here, stop loss 70 pips, around 70 pips, and potential profit 300 pips, which makes it very, very interesting trading opportunity. Let me show you oil. Oil, we highlighted that there is a possibility of a breakout of this support, and it happened, but it was a false breakout. Another false breakout on oil. Well, look at that. That is a side trend, right? Not very good environment to trade. I thought they're gonna test the lower line of this symmetric triangle, but chances for that are rather limited. So maybe probably we'll have another test of this horizontal resistance on 57.4 dollars per ounce, and that is a good possibility. That is a good place for a potential reversal here. Also, let me show you DAX. Obviously, we were having problems with this resistance. As you can see, it got tested yesterday, on Monday. Yes, on Monday, yesterday, after Donald Trump. We are having a nice upswing, and we are about to make new local highs. Again, it's a typical scenario, right, for stock traders. There is a downswing, there is a V-shape reversal. Downswing V-shape, downswing V-shape, downswing V-shape, downswing V-shape, right? We are warning our traders all the time. Watch out for that. It doesn't really matter what's happening on stocks worldwide. It's or not on the stocks, but generally in the macroeconomic and geopolitics. It doesn't really matter if there are wars, if there are risk on, risk off mode, right? Stocks are going higher anyway. Like, bad news is a good news. Good news is obviously a good news. No news is also good because we have expectations, right? We do not need any news. We have expectations, and we can buy on expectations. That's actually what's happening right now on stocks. So going against the trend can be very risky. I'm curious what's gonna happen with gold. No surprise for you that I'm bullish on gold. Now it looks like a time for taking profits. Traders will enjoy taking the profits right now. Cable has fallen nicely. We had 60 pips to this support, now we have 40. Very big chances that it will be tested. If not today, maybe tomorrow, right? Silver, look at that. They are still defending. Silver much stronger than gold recently. They have this horizontal support, they have a trend line. They still have a big distance to this level. And euro dollar to this support. How many pips do we have? 40 pips. So still a good opportunity for short-term traders, right? 40 pips is something worth looking at. Thank you guys very much for attending daily analytical report. Keep in mind that trading and investment in financial markets involves an element of risk. And follow us on our Twitter account and our website alpari.news. Thanks very much and goodbye.